Hi, welcome to the market alert for Friday, the 18th of February 2021. So bonds and bullion bid as Bullard, Blinken, Bloviation batters big tech and Bitcoin. Bullard, the Fed should have plan B, sell more of the longer term bonds from its portfolio to push longer term interest rates higher. And Blinken, it says it could be a violent event that Russia will bring on the Ukraine. So again, all hysterical language there and inflammatory language, but no surprise. News today, let's have a quick look through. Economic news, retail sales from the UK, 7 a.m. and existing home sales, US at 3 p.m, day 2 of G20 meeting. You wouldn't know that was going on, would you? And then they're rolling out Waller and Brainard this afternoon at 3:45 and 6:30. In the gold-silver ratio, you can see that the ratio is moving to the downside. This is because silver is breaking to the upside, heading towards the 200-day moving average in the daily chart, which we'll look at in just a moment. But we'll start off with the Dow. Another bad day yesterday. The market down 622 points, trading down to the 89% retracement that we drew in yesterday. Actually trading through it and then bouncing back. You've got this other 78% that we drew in from the longer term here as well, from here up to here and back. Let me just change the colour of this arrow to blue so you can see this a bit more clearly. So this area here, very important for the Dow, and it's bouncing off this on the overnight. But yesterday, look at this for yesterday morning. You can see the market 3 times here at the DP. Each time overbought, and apart from this one which was overnight, and divergence also highlighted as well, and then it was just straight down. Bit of a bounce, dead cat bounce there. We get a continuation pattern despite the fact that we're oversold here. What happens is the market bounces back, it fails to move anywhere. You get another corrective phase in here, and or retracement I should say, not corrective phase, retracement. And then we continue the pattern, and we see the continuation with the close back below the 5-bar moving averages there. Prices then find support, again get the climatic action. We're oversold, and if I can just compress this chart a bit, there we go. You can see that again we get a correction. We see them buying back in, and the market moving up to the DP and the 50-bar moving average, where now it is overbought with a crossover on the stochastics, and we've turned back to red there. So a bit of weakness around in the 30-minute chart, despite the fact that the daily chart is giving a bit of a bullish indicator there at the moment, with the potential of being able to move back to the upside. At the moment, stuck at the 38% retracement there. So let's have a look at the German DAX, which I have somewhere. It'll be this one then. So in the DAX, also lower yesterday. Market trading down towards the 62% retracement, and now attempting to move back to the upside as well. Let me just draw this in. With this a bit stronger, we've traded up to the 20-bar moving average and the 50% retracement. At the moment, we need to break this if the market is to move to the upside and have any chance of getting through the 62, 78 and 89. But you can see the market is clearly stuck in a sideways move. All-time highs? I don't think so. I don't think so at all. We've seen those, and there's too much happening now with inflation. The economy is starting to slow. Even Goldman Sachs have admitted that. Not that it means anything, but they have mentioned it in a news statement yesterday. But we can see clearly now that it's over for the upside for the time being. Unless the only thing that would alter this is that we see QE coming back and they don't do the QT. Never say never. They did that in 2018, and that was without hyperinflation, when they actually backed down, increasing rates, and then tightening and went back to printing more money. I don't think they'll do that this time. But then don't say, never say never with the Fed. You just don't know what they're going to do you? It's anything is possible. Similar picture yesterday for the DAX. We kicked off with oversold, the market finding support there. And as I mentioned in yesterday's market alert, that they would gun for the low, move the market back to the upside, which we'll look at in more detail in just a moment in the 5-minute chart. But you can see them buying back in with the green bars here. And then as soon as we kicked off at 7, we saw the market being moved to the upside. Again, we've got a bit of a pullback, and then we come back here, pull back to the close, not like the DP in the Dow, and then we just go south. Again, we get a bit of a bounce, but then we get a continuation of the market down until we get the climatic action here as well as we saw here. The only difference here is, as shown in the course, is that a move tends to be like this, and there you'll see it, and then we do this, and now we're like this. So that's what we've got at the moment. Overbought like we have with the Dow at the moment at the BRN crossover. You can see that as well. But the market's not falling out of bed at the moment. In the 5-minute chart, we go back to yesterday morning. As I say, when I spoke about the markets in the alert and said that they would gun for the low, which they did immediately. I recorded the alert here. Again, you've got this retracement, and bang, off we went straight through the low, and then you can see the low became a support. This is not uncommon. This is exactly what they do. The market had one bar that closed below the 5 bar, but then continued higher up to the DP area. Got to the DP. What do we have? Lots of selling, and again we have a bounce. That bounce is around 62% retracement, but let's just measure it for good measure. 62% retracement, bang on the golden ratio there, and then you see the market move lower. We then went into a sideways move. It was quite uncanny given the volatility we've had recently, but again we traded through these patterns and then traded back up, as you'll see here. If we go from here down to here and then just drag this across, you will see that we traded to the 78% area before the market then became sideways once more. And then in the afternoon, just as the Dow opened, this is where we are. We are overbought, and not only overbought, but again from here down to the low, you will see that we come back up to 89%, bang on it, and the market then moves south, and again we get the bounce. So we've got the up, down, down, up, and then back down. And again, as soon as you start to turn red again here, we get one bar that comes back, but it's stopped by the 20 bar moving average, and then the resumption. And then down here we've got this. So you've got this pattern all the time. It's just being able to observe it. And overnight prices have weakened and moved lower. Oh, that was the evening session, sorry, with the Dow. And then overnight, you can see here again, we've got the classic oversold, crossover in stochastics at the low. Well, say no more, because they don't want the low breached, the previous day's low breached. And again, you can see that's a double bottom in this case here. But look what happened there at 1:35 a.m. Straight up consolidation, and to get through the DP, the 200 MA, and then up to another 100 points, and we get the crossovers, and we're overbought. So the market has now been making its way down, so you can see there, and we're oversold at the moment, with the market attempting to move back to the upside, with the futures opening at in 15 minutes time. But already heading into that overbought territory, so it'll be interesting to see how it copes with the 20 bar moving average. At the moment they're absorbing with that supply. At the moment the supply showing that there's some absorption of volume as they're trying to move the market to the upside there. And in the metals markets, let's have a quick look. We can see that silver is being allowed to move up. We've even got some increased volume here, but we are becoming overbought, and you can see from the previous occasions when we've been overbought, the market has corrected before being allowed to move to the upside. Maybe a bit different this time, but the killer here is this 200 MA. Every time we've got to this or traded through it slightly, as you'll see there, you can see how it's been a resistance. So in the silver market at the moment, we've got to take this 200 MA out and take it out convincingly. We've got to get above the 25 high as well. I think we touched it here, didn't we? Just went through, no, 24.69. So it must be the one over to the left then. Let's just have a look. Let's just add these to the chart just for good measure. 25.39. So in between the two areas here, we've got 25, which we can see there. So yeah, it'll be interesting to see if we can get through this area today. In gold, the reason the ratio is down is because gold is actually moving to the downside at the moment. That's why you're seeing the gold-silver ratio moving down, because silver's moving to the upside and gold is moving down. So that's an interesting one as well, because you don't see that very often. The dollar starting to look weak at the moment, but it needs to take out that 50 bar moving average and the 62% retracement. We are overbought, so there is the potential to move to the downside, but of course just being overbought doesn't do it. We need to see other forms of weakness, which we've got with the red parabolic red bars, and also yesterday an increase in volume there as well. In crude, this sitting sideways, we've got demand here. We've had a bit of a pullback. We're not actually overbought, but what is interesting here is that we've got 3 red bars sideways, and then we've got this demand as well. We've got the 20 bar moving average as well, and the retracements where the market's currently sitting at as well. So there is the potential for crude oil to move higher. Any glimmer or any rumour of war, we'll see this market move to the upside. And then finally, in the currencies, let's have a look in the JPY. Again, we've been sideways. We spoke about this yesterday, but we're sitting at the 62% retracement there at the moment, and prices sideways to higher. Dollar needs to tank, so these can move to the upside. In the 30-minute GBPY, you can see yesterday oversold, coming back, or this is overnight, early evening, coming back to yesterday's low, finding support there with all of the criteria, and then moving to the upside overnight. So again, we've got some resistance here at the moment. We were overbought, but we've since pulled back and now attempting to move to the upside. In this one, you would certainly need to see prices take out the 89% retracement here, and also the resistance to the left. And in the pound daily chart, sideways to higher as well, because obviously the dollar is looking a bit weakish. We need to drive through to the upside on this. We've got the 200 MA, which is a resistance, very similar to silver in this pattern. Needs to be taken out on the upside as well. Let's just draw in a few more fibs on the upside. So from there down to there, you can see that we need to take out the 78 and 89. We've got a bit of a cluster going on around here as well, so all of this needs to be removed if prices are to move higher. I would use the 30-minute chart to have a look, see how well this is going. It's already heading towards overbought and the market's sideways, so really is struggling. However, it is finding support at the DP at the moment, but the pound will be waiting for the retail sales, which are out at 7 a.m. Okay, I think that's it. It's a bit of a long one, but there's a lot going on at the moment, so let's see what happens today. See if this dead cat bounce can keep bouncing from the overnight, or we got the same pattern where the Dow opens at 2:30 and then we just see the sell-off. Also keep an eye on the 200 MA in the silver as well. Okay, that's it for this one. Have a great weekend, and it's President's Day on Monday, so the the US markets will be trading limited hours or limited markets as well. But have a great weekend, and I will see you on Monday. As ever, thanks for watching. See you in the next one.